YouTube fam, Fat Man Zoom here. As promised, I wanted to give you my Zoom earnings preview, discuss a little bit about what happened last earnings and what we're looking at this earnings. And the reason why I'm doing this is just because I'm excited and I think this is going to blow out any conceivable expectations. So I want you guys to be aware of it. I want you to know what you're looking at. Zoom has proven time and time again to be extremely volatile. Last earnings, they crushed it. They had a crazy move up. And I know many of you are wondering, well, will it have that move? So we'll answer that question. We'll get to what the expectations are of the stock after earnings. But first, let's actually dig into last earnings. And I'm going to pull up the presentation from last earnings. Go ahead and share my screen. All right. So this is actually the slideshow from last earnings, which was Q2 fiscal year 21. Here's just the highlights that it brought up. Revenue growth. I'm sure you've heard by now, 355% year over year, incredible. Enterprise growth, so growth in customers with 10 plus employees, huge numbers, 458%. And who cares about the virtual academy? Let's be honest with each other. But I wanted to get into some more specific details. So let's start with the revenue growth. So if we look at, let's go to slide 8. If we look at slide 8, here's a historical perspective of the growth per quarter. And as you can see, let me go ahead and pull up my handy dandy annotator. As you can see, we have from Q3 fiscal year 19 up until now, and you see steady growth, consistent growth. The quarter, 2 quarters ago, their earnings, you saw a big pop, and then their first full COVID earnings, you saw this monster move. And what you're seeing here, this 355% growth, that's from year over year. So you see from Q1 to Q2, what do we got there? What kind of growth is that? So we have 664 million into 328. So we had about 102% growth sequentially quarter over quarter, which that's huge as well. So that's the first thing that gives us huge excitement. As far as this quarter, I expect for the year over year growth to be just as substantial. I think there's a possibility that we could see 400% growth. It's pretty ambitious, but I would not be surprised if we did see that. Realistically, we should be at around 360 to 390, but 400%, you bet your ass it's gonna be a wild ride if we see that. The other thing we talked about, enterprise growth. So if we go to the next slide, enterprise growth. So these are companies that are generating 100,000 plus in revenue over the course of the year. 112% year over year. Enterprise acquisitions, we know that these companies are moving to stay at home. And so they need a tool come into play, Zoom. All right. So with Microsoft Teams has been historically known to dominate this space. This shows that Zoom is getting penetration in the enterprise space. We all know that this is a better product than than Teams by all account, and this bodes really well for them. This is another one we're going to be looking at because nobody is surprised by the growth, just by the small company or the growth in personal use, but enterprise growth to show that people are adopting it and not choosing Teams or moving away from Teams bodes really well. So we need that number again to increase above 100% year over year. I do not expect that to be a problem either. Now they did, if we'll talk about a headwind later, but one of the headwinds we mentioned when we reviewed the last call was actually businesses with 10 people or less. They showed a slight increase in growth. So that's the only metric they didn't blow out of the water. They showed about a 36% increase year over year. Normal is about 30%. So they kind of performed in line. That could potentially go up. I anticipate that increasing a little bit greater beyond that 36%. But if you would ask me which one's most important, Fat Man Zoom, I would say the enterprise traction. Companies with 10 or more employees, 100K plus in revenue trailing 12 months. The next thing we're going to look at, we'll skip to slide 12. And we're going to look at the international presence. This is what I'm most excited about. I am most excited about the international growth and the continued opportunity in the international space. So, what are we looking at here? What we're looking at is year over year revenue for the international. Um, you see, America's is up 288%. The rest of the world is up 629%. That is insane. More growth. Let's continue to see that growth internationally. We see some other countries who go back into who are rolling back lockdowns. So that's awesome. And then that constitute revenue share. Now, some people might be like, well, the America's revenue share went from 80 to 68%. I'm not bummed about that because we saw growth. I'm actually happier because we're not just reliant on domestic, if I'm Zoom, domestic revenue. We now have a broader split across the rest of the world. So I would actually love to see America's be around the 50%, and then we could get um, the other markets to account for the other 50%. Now that's going to be tough, but 60-40 is not out of reach. Probably what I'm most excited about is international. I think that's going to make the difference because as you look forward, to know that the rest of the world's adopting it is huge. And then the next biggest thing, maybe just as big, is cash flow. Cash is king, people. And that's what's important to these businesses. Cash flow. Look at this growth year over year, free cash flow. That's the money that we can use to buy back shares. That's the money we can use to buy companies, to reinvest. A growth company like Zoom, we don't want them to give dividends, right? They could do that. They could do a share buyback. Share buyback wouldn't be bad. But what you should do first is look for greater opportunities to expand. That could be through acquisitions. That could be through research and development. So those are all great opportunities. You're talking about $17 million the previous year, and it went to 373 million free cash flow. That the numbers, this is what's going to be the difference maker as they move forward. How are they going to allocate that cash? How are they going to use the cash? They have it. Great. That's the first thing. Now, how are we going to allocate it? Look for this earnings or next earnings for them to start talking about key strategic acquisitions. Moving on to the outlook. So the outlook, we'll do actually, let's first go to the historical snapshot. So the historical snapshot, this just kind of gives you an overarching macro look at the metrics from Q3 fiscal 19 until the last quarter, which was quarter two, 2021. And just key on, again, the revenue growth. You got steady 100%, dipped a little bit last year, and then you got the boom, beginning of COVID, 169, and then 355. Let's look for that to grow. We see the cash flow. Look at this. Look at these numbers. 10 million, 5 million, 15, spiked up Q3 20. But then again, when this COVID started, look at these numbers. And then lastly, the enterprise, pretty good growth. Again, 100%. Keep staying above 100%. That's what we need. That's what we're looking at. They did give guidance. Let's talk about the outlook and our expectations. So today's earnings will be quarter three. We got one more earnings. They'll probably adjust guidance. We'll get to that in a second, but they're projecting 685, 690 million revenue. They have to beat that. They will beat that, no doubt. Earnings per share, 74 cents. They have to beat that. They will beat that, no doubt. The question is by how much? So I ran some numbers and I looked at 15% growth, which was on the low end of the spectrum. That would put them at year over year, 357% growth and $764 million in revenue. If we get a little bit more realistic, or I would say a little bit more ambitious, and this isn't out of reach. 25% growth sequentially would be 390% growth year over year. That's 180, $830 million in revenue. I think this number is feasible. I think they can beat their projection by over 100 million in revenue. And I think their earnings per share, the range is 84 to 91 cents. Now, if you watch Stock Watch Sunday on the other channel, on the Chaos, I had estimated $1.14 a share. This needs to break $1 a share. It needs to break 800 in revenue, and they have to have great cash flow. And essentially, they need to see the same growth year over year. And that's what I think will make the stock move. It's not going to be easy for this stock to move, but here's why. Here's the case that it will move. When we say earnings are typically a coin flip, a gamble, that's true. And it would stand true for Zoom. The only caveat to that is we had this vaccine play. If we didn't have the vaccine efficacy news, I think the stock going into earnings would be at about 550, maybe even 600 when it's currently trading about 485. This actually makes me think that there is great potential upside for Zoom. And normally I wouldn't be in it. This is why I'm in it, for earnings. Now, how do you play Zoom? If they hit these numbers that I laid out for you, I think no matter what, you're going to either dollar cost average if it's dips. I think there's a downside of about 10%. I think it could get to like 440. If it's at 440, I would add on dollar cost average. On the upside, I think this could go past 550. So I'm looking either for take profits above 550, or I'm looking for dollar cost average below 440. Either way, as we say on the Chaos channel, we've told you guys time and time again, Zoom is not going anywhere. This is the new way of doing business, and this is a great opportunity. So keep an eye on the numbers, have a plan, watch for the fake out. So you might see a move real quick. It might dip down, move back up, or vice versa. But if you know these numbers and you look at these numbers, we should be able to reasonably predict where this is going. Now, overall guidance should be adjusted and should be increased. If they if they pull their guidance, which some companies have, if they pull it, then that doesn't bode well for Zoom, but you should still feel confident. You should still dollar cost average. It just may not have the run up. I doubt they pull guidance because they were willing to do it last quarter. They actually told us that there's headwinds as far as they thought that we would be actually phased in sooner. That didn't happen. So that helps them out. And I think you're going to see that reflected on this earnings. Now, what do they have moving forward? What we want to hear about is healthcare. There's huge opportunities in healthcare that they haven't even scratched the surface on. Education, they haven't even begun to monetize that. They're offering it for free. And I expect those to adopt when we reopen. Zoom for phone is a great opportunity for them. And their hardware as well, creating a subscription model. So they're creating all of these revenue streams and all of these opportunities that are positioning themselves to continue to grow, not to mention how are they going to leverage that cash flow. With all of that information put together, Zoom to me is a clear buy. There's no doubt in my mind. It's here to stay, and they're going to have a strong quarter and probably a strong next 2 quarters at the minimum. With that being said, I'm Fat Man Zoom. If you guys have any questions, leave them in the comments. You can check me out on Own the Chaos's channel. I'm live every Sunday at 7:30 p.m. Eastern time. We also go live every Tuesday and Thursday at 2 p.m. Eastern time. Check us out, and I'll check you guys here for the next video.